Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by Philan Academy. So in this week market is down by minus 0.5 percentage, but it protected its previous week low. There is some sorts of indecisiveness at a high level after touching the 20,000 level around we are seeing, but still there is not a bearish confirmation has been established and move is still intact on the high side. This is the daily chart that we are seeing the previous week. All the five trading session has been into the right. In the range bound sessions, the broader range that we have witnessed is 18,850 on the higher side and 18,650 on the lower side. Market has closed at a lower band of the consolidation patch, but there is not much major violation that we are seeing. So for the coming week, the next best support level that we are seeing the market is an 18,500 level. That is what an upper band of the consolidation patch, and the next best is the 18,300 level. So this 200 point is the range for the market in a coming week. Underlying tone remains in a positive. This is a very short term period moving average, 9 period moving average. It has moved below this level. There are below to that there is some sort of violation happen. But if we are using the very conventional moving average, that is a 20 period moving average, market is still selling above that moving average very comfortably. And in a previous history also, this particular moving average has acted as a trend navigator for it. So the immediate support level from the price action perspective and from moving average perspective, they are both coinciding at the same level, that is a 19,500 level. On the higher side, we are seeing the stiff reactions that we were discussing in the previous videos as well, that 19,850 is a kind of the reactions level that we are witnessing, because on the intraday chart on multiple occasions market has reverted down from this particular point. A couple of days back the prices has reacted from this level only. So this is what immediate reactions that we are seeing. Fresh upside momentum can be expected above the 18,000 or 19,850 level, followed by the 20,000 level. And as per the pattern target, as we are able to see, the next best upside potential is the 20,000 to 20,200 level, but that is become more convincible once markets start to sustain above 90,850. Now the thing is that in a market we are seeing some sorts of pain that has happened, but it is not a story across all the sectors. In this particular week, if you look at the sector wise, who are the laggard sectors? So if you see that FMCG having the good weight, Bank Nifty 1.36% down, Nifty IT, financial services, private banks. So the leading counters, the large cap stocks, the leading sector which is having the good amount of the weightage on the market, they have drifted. Sector wise, there are many other sectors that they are doing very well. So this is a kind of the sector specific and a stock specific market rather than the broader market rhythms. If we pay attention on the sector wise, which sector has started to pick up its momentum well. So this is what the Nifty Pharma up by near to the 5%, Realty 5%, Healthcare, however it is an overlap of pharma within additional stocks, CPSC stock, media, metals, energy. So this all stock has started to do comparatively well. So these are the kind of the sectors where we will be having the eye to find out the opportunities on the long side in the coming week. Specifically from the micro, okay, this is Nifty next 50, the indices, the junior 50 also we can say. So this is up by 2%, where the market is down by 0.5% kind of thing. If you look at the Nifty small caps, so they have ended on the positive side. Mid caps, they have ended on the positive side. So apart from the batting the few heavyweight sectors and stock, there is a selling pressure that we have observed, but the overall rhythm of the market still sets the positive tone. Last week we have talked about the media sector that they have revival, and we were talking about the Sun Pharma, Sun TV, so which has phenomenally did well. So in this week, I am also taking my view from another stock, that is in TV 18 broadcast. So what happened to this particular stock is, uh, this stock has come down after a very good up run into the previous years that we have seen stock prices slashes down quite well. The 27 level was the one where historically it has acted as a reversal level, and we are seeing some sorts of upticks into that particular stock. Now the stock has started to move above its moving averages as well. On the daily chart, the stock price, it has went up, it came down to its previous bull candles low and started to show the reversal sign. So in a very short term trade, I can see that if these particular levels are holding, so this is what the recent candles low and the white color moving average where the prices has acted as support level quite well. So this becomes my stop loss point for it. So 40 is the level, so 39, yeah, 38.70 kind of the things can be the stop loss for me. And on the high side, if the thing pans out, then the next best resistance level that I'm seeing is around this particular point, 42.75. So it's a very good risk reward ratio. I think for a 1 rupee risk, there is a 3 rupees kind of or a 2.75 kind of a risk reward is that. So that is one of the more probable setups that we are able to see. One stock that I have discussed earlier but didn't work out that much well, but still the structure is fine. That is in Concord. So in the Concord, what happening is that prices are consolidating for a good time. This is what one of my favorite pattern. Prices has given the breakout, it comes to the lower band of the range and then it starts to pick up its momentum. So in that cases, normally I expect that price touch to its immediate resistance, which is around the 750 level, and right now the stock is 688 level. I have shared this stock earlier as well, but at that time there is not much momentum that we have seen. But again, now I have started to see some sort of traction in this stock. Stock is at a 688 level. Once I find that the stock is moving above the 690 level, so in that case the immediate level becomes my base, or I can say that this is what my stop loss. So 20-point stop loss I can say, as 690 above, that is what our entry trigger point, 670 which is what a lower band of the range, below to that, that is what our stop loss. And on the higher side that we have discussed, then these all variations will not have that much strength, because now the good base has formed and prices started to pick up its momentum. So eventually the next best variations that I will be able to see around this particular points. So that is what a 750 level. So good risk ratio that is getting unfolded in this. In some of the stocks where I am seeing some selling pressure, that is one is a Coal India. Coal India from high time to low time frame, if we have the journey. So here, let's say this is what my monthly chart for the Coal India. We have seen the very good upside momentum. Prices has moved up quite well, and this is what the immediate high that has formed. So which is connecting with the uh, long-term monthly moving average, which is very important level. Secondly, this level coincides with my previous resistance band as well. This is what my last inception point of fall. Prices come to this level. Many of the times price comes down, moves up. So that is what in second test that we see, and then again it starts to slide. So here we can see a little bit better visuals on the weekly chart. So this is one of the first move that has happened. The bearish engulfing kind of candle pattern has formed. Prices has come down. Then again the prices has picked up its momentum, entered in my previous resistance band, and we have seen some sort of mild selling pressure. After 2 weeks upside momentum, the third time I am seeing the bearish engulfing pattern and prices have started to slide. So it is showing me some sorts of a bearish continuation sign. And on the daily chart, if I see prices are continuing the weakness, and this is what the immediate base that it has broken out. If I look at the line chart, so whatever the previous basis that I was witnessing, so this is what my support, this is active resistance, prices has moved below this particular level. So it is showing some sorts of a weakness in this particular stock. So this becomes my stop loss in that case. So right now the stop price is 227 level kind of thing. So 231, 232 becomes my stop loss on the lower side, because this is what my immediate high. And then the first support can be this one. But when the structure is negative, so you may see the certain violation of it. So 224, it is in a kind of the 1:1 level, but 224 level get breaches, then there is some sorts of more pain, and the stock will be ready to touch. It's in a lower band kind of this one. So 201, then the risk reward ratio will be in a quite well if the 224 level is breaching on the lower side. So this is from my side. Whatever the discussions that we did for the Nifty sector specific and stock specific, that is for the educational purpose. Thank you so much.